Hello and welcome back to the channel. Now, the tech-based sector is one of those sectors globally that has been experiencing a lot of massive growth. You have seen in the past few years a massive boom in the tech sector. It could be AI improvements, it could be whatever proprietary tech has come through in these past few years that has been boosting the tech sector and any shares that are tech-based. Now, if you're looking at most of the companies, most of them are performing way above average. Others are exceeding as far as generating income for their shareholders. Now, the question will be, why is it that in such an economic environment, we have some tech giants experiencing serious financial troubles? In this video, we are speaking about MultiChoice as well as Cell C and looking at some of the financial challenges that they are facing and probably them not being the right kind of bet that you can make as far as choosing a destination for your investment. This is Friday Money Matters, this Friday and every other Friday on this channel. Thank you for tuning in. Please don't forget to subscribe to the channel for exciting insights as far as money issues, financial education, as well as investments are concerned. Okay, let's jump into it. First, let's look at these two tech giants. You've got MultiChoice and Cell C, which are part of the bigger organizations in South Africa. They are quite huge as far as capitalization, as far as size and operations are concerned. Now the question is, why have they been performing so badly in the last few years, and in the current circumstance they find themselves performing not so good? Simply put, on analysis we can say that the two tech giants are technically insolvent. What that means is that their assets are not sufficient enough to cover their liabilities, especially in the short term. You find that their current assets are outweighed by the current liabilities, which means they are unable to service in the short term things such as loan repayments and so forth. Now let's look at the reasons why. Why is this the case? Now, starting with MultiChoice. In the last few years, MultiChoice has been faced with a massive decrease in their traditional TV subscriber viewers. This has been on the decline. A lot of people preferring to opt for streaming services which are now accessible wherever you might be in the world. So as a result of that, MultiChoice took a decision to make massive investments in streaming, in trying to build their streaming capacity, especially to improve the amount of subscribers for Showmax, with a target of about 25 million subscribers for Showmax by 2028. Whether this is going to be possible or not, we will wait to see. Only time will reveal the status of that particular circumstance. However, one thing that we need to pay attention to is that as such an investment requires a lot of capital. The capital outlay there is quite huge, and with such huge capital outlays, it means that the debt to equity ratio then is in the side of debt instead of equity. Therefore, chances of them even having troubles servicing some of these loans are high. So therefore, it means that they become a risky investment. If you're looking for an investment in the short term, I don't think they're a good bet. But however, someone may argue and say that because they are investing massively in trying to build their subscribers, especially in the streaming arena, it might translate to bigger gains in the long term. Whether that is possible, only time will tell. What you need to do then is to look at other businesses that have done this in the past, try and follow the trend and see exactly whether they will go to weather the storm and turn the corner. Now, looking at Cell C. Now, Cell C in the past, they have changed their management. they're trying to turn the course of the business. Sometimes, change comes with all these other challenges, and change takes time. Now, whether the new management is going to turn the course there is anybody's guess. However, efforts are in place to try and turn the business around. They also have been working on their balance sheet, trying to improve their performance, especially as making their valuation and asset base a little bit larger with time. But as I said, this all takes time and it takes a lot of investments, and where there are such investments is a lot of risk that is involved. Again, one thing to take note of there is that in the telecom sector in South Africa, there is fierce competition, and whether the company will be able to contend with the competition that is currently available, again, that is a lot of maybes. Now, usually my advice to people that want to make choices as far as stocks are concerned is this: if there are a lot of maybes, then the low level of certainty suggests that the risk potential is quite huge. So always verify information before you jump into a trade, especially when we're dealing with securities such as stocks. Just to add on, if we can just add another company in South Africa, South African Post Office. Now, the South African Post Office is facing liquidation and is currently looking for a bailout from the government of about 3.8 billion rand. Now, this suggests that there is quite a general financial instability in the tech-based sector in South Africa, and probably in a lot of other African countries. So as a result, probably this is a sign that you need to stay away from such a sector or from such companies. But if we're to look globally, let's look at other success stories in the global tech sector. We have seen Microsoft, Google, we have seen companies such as Apple doing so well. Now, the difference with the South African companies is that for these companies that are doing well, you find that they've got low debt levels. Now, if they've got low debt levels, they are not always under pressure to make sure that they service those debts, which means that extra income that is made is channeled toward research and development and coming up with new alternatives to appease the customer base and make money for their investors. Now, on the other hand, again, a lot of proprietary information, like I said, proprietary tech, putting them shoulder and head above the rest in the market. You've got AI coming through, Microsoft, Apple have got new gadgets coming in all the time, and now they've also incorporated AI in their gadgets, and this is what everybody's talking about. So everybody who is bound to demand such gadgets, and in doing so, the valuations of those companies keep on increasing. Hence, you see the revenue growth in those particular businesses. However, it's not doom and gloom through and through. Remember, if you are looking for a long-term stocks to invest in, who knows, maybe these South African giants would be those kind of destinations. However, still, I will emphasize that you need to do conduct research that is in-depth, so that you satisfy each and every question that you have. Another thing that you ought to be doing if you're investing in stocks or in any other financial instruments, make sure that you contact a financial services provider, a registered broker, or anyone who is in the investment space and can give you information that you can apply in making your investment decision. Remember that trading is a technical exercise. You need as much information that can be verified for you to make the right kind of decision. Otherwise, I'm interested to hear from you. Leave us a comment down below and tell us where you are directing most of your investments if you are trading in the South African stock market and any other stock exchanges across the world. We need to hear from you, and also anything else that you need to share on Cell C as well as MultiChoice. Will appreciate all your efforts to support the channel. Don't forget to give this video a thumbs up if you enjoyed or learned anything from it. And also subscribe if you have not yet subscribed. This is Friday Money Matters. We'll see you in the next video. Thank you so much for watching. Bye.